I'm going to show you a stretch trade that almost nobody is talking about. So when you look at the chart of stretch, the most obvious trade that you'll see on social media is people talking about longing it from the $88 level, trying to play that move back toward $100 if it happens. And if that happens, they're going to capture the yield, plus they're going to capture the capital gain. There's actually nothing wrong with that trade idea. I think it's a fine trade idea, especially if they're using stop losses. However, there's another trade setup that I haven't seen anybody talk about, and it's something that I call spread trading. So if I go into TradingView and I actually look at the spread between Stretch and STRC's product SATA or SATA, however you say that, what I'm going to see is there's currently a roughly 9% spread between the two. So if I want to play this spread, I can actually long and short equal amounts. I could, for example, take out 100 share long on Stretch, and I could take out 100 share short on SATA. And if you're wondering why somebody would do that, it's because it hedges the risk. If they both climb back to $100, the spread will close to zero and the spread trader will make the difference. So almost 9% in this case, minus some small carrying costs because there's a slightly different yield between the two different assets. That is a smaller return than what somebody would get just investing in Stretch if it goes back to $100. The reason that somebody may still decide to trade the spread is because let's say that hypothetically some type of catalyst breaks and it sends Stretch to zero. There's a possibility that Stretch going to zero would also crash other similar assets. And so these might both go to zero. The really neat thing about spread trades is if that happens, the spread still goes to zero. And that means that the spread trader will still make nearly 9% even if both assets collapse. And if you're wondering how the math works, it works like this. If you have 100 share long on Stretch at whatever it is, 88 bucks right now, whatever, that's going to be 8,800 bucks that you're going to lose if it goes to zero. But remember, you'd also hypothetically have 100 share short on SATA, which is currently around 97 bucks. And so you'd actually make $9,700 on the short. So you'd actually make $900 even if both went to zero. If they both go back to 100 bucks, then you're going to make about $1,200 on Stretch and you're going to lose about $300 on SATA. So again, you make roughly $900. If they both go to $50, you're going to make about $900. Again, all of this is hypothetical. It's just using the math as an example. I'm not suggesting that you specifically take this trade. This is for educational purposes only because a lot of people in this space do not realize there's other opportunities other than just directional trading. It was about 6 years ago when I first learned about this concept. And back then, a very popular strategy was actually longing perpetual contracts and shorting the expiring futures contracts because it was very predictable. As the expiration date approached, the spread almost always closed to zero. And so the only thing that we had to do back then was basically account for the carrying costs. And in the world of cryptocurrency, that meant the funding rate. This is a similar type of trade. You have to account for the carrying costs, right? You're going to be losing money on the dividends on SATA, whereas you'll be making money on the dividends on Stretch, assuming they don't stop paying dividends for whatever reason. So the pro is it's hedged. As long as the spread goes back to zero, you make money. What's the con? Well, the con is, the worst case scenario is SATA could go up in price, meaning you lose money on the short side, and Stretch could go down in price, meaning you also lose money on the long side. So that's the major risk with this type of trade. I want to be very specific. I'm not telling you that you should take this trade. I simply wanted to use it as an example to open your eyes to some of the other opportunities out there that most people are not going to be talking about on social media. If you enjoyed the video, give it a thumbs up and subscribe to the channel. Please remember that I am some guy sitting in a spare bedroom, so nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. Thanks for watching. As always, please remember to invest and trade safely.